afternoon, and welcome to Dissect Asian Midday Market Watch on Friday, the 10th of May. I am Samantha Voon, and today we are joined by Kelvin Wong, Senior Market Analyst at Oanda in Singapore. Kelvin, good afternoon.
Hi, good afternoon and happy Friday to you, Samantha.
Happy Friday to you. So, before we get into it, let's have a look at the regional stock market performance today. All right, so we have the Japanese Nikkei 225 up 0.34%, the Shanghai Composite down 0.22%. In Hong Kong, the Hang Seng is up 0.81%. In Australia, the ASX is up 0.58%. The South Korean Kospi is up 0.6%. In Singapore, the STI is up 0.62%. And in KLCI is down 0.04%. Kelvin, what is happening today?
Oh, yeah. So if we start to see the markets across Asia, we're kind of in a risk-on scenario, pretty driven by the fact that a very strong momentum narrative or backdrop seen in the US major stock indices and very much more pronounced on the European stock indices. So if you look at the European stock indices for the entire of this week, it has been outperforming the rest of the pack. So in fact, one of the benchmark European stock indices, the German DAX, yesterday managed to breach a fresh all-time high. So what we could see over here is from the European side of the story is more related to earnings growth that is pretty much positive, and as well as the urgency of the European Central Bank bringing forward their potential interest rate cut to this summer months of June or July. So that's actually also encouraging a incremental liquidity backdrop in the European stock market as well. So over to the US side of the story over here is that yes, we start to see the major stock US indices going up this week as well, but on a less strong footing. If you look at the S&P, the Dow Jones, they are still hasn't reached their March all-time high yet. But what we could see over here is a momentum player seems to be coming back into the picture as well after what we could see a clear daily close above the 50-day moving average on the S&P 500 exposed last week risk event, which is the non-farm payroll data and as well as the FOMC meeting. So what we could see over here is that market players at this point in time seems to be much more focusing on the positive momentum rather than the fundamental backdrop. Okay, so let's talk about the fundamental backdrop right now. So fundamental backdrop, there could still be a potential risk of stagflation coming back into the picture, especially if you look at the slew of Federal Reserve officials speaking this week. More or less, there has been kind of guidance from them that they are quite hesitant to actually ignite the first interest rate cut versus the rest of their counterparts in Europe and as well as the Bank of England. Later we'll talk about that. So they are much more concerned about sticky inflation that is still in play in the US, and also pretty much concerned about potential rising oil prices that could actually make their challenge the Federal Reserve monetary policy guidance more less dovish instead.
Mhm. Okay, so yesterday's announcement, like BOE announcement, yet another interest rate that is left unchanged, right, at 5.25%.
Yes,
Uh,
precisely.
though, though, yeah, though we see more dovish hints from BOE, I'm sure it has impacted the FX market. What's the current state right now?
Yeah, so if you look at the current state of the key central banks' monetary policy stances or guidance, they are right now in, I would say that, not in synchronization mode. So firstly, we start to see the European Central Bank turning very, very dovish, starting from the Swiss National Bank, who has cut interest rate in first quarter of this year, and ECB has given more hints that ECB, the European Central Bank, has given more hints that very likely they will start to ignite the first cut in next month or so. So right now we have another one that is jumping the bandwagon, which is Bank of England. So Bank of England initially was rather less dovish but more hawkish than the Fed at the end of last year, and only that it starts to turn much more dovish in February, indicating to them that the inflationary trend in UK has started to decelerate within their expectation. So in fact, yesterday among the voting members, 9 of them, the NPC members, 7 of them voted stamp pad, which is no change. But however, interestingly, 2 of them actually wanted an interest rate cut yesterday. So we start to see a shift of tonality and thinking of among the Bank of England officials, more erring towards the dovish side of the camp right now. So that actually starts to market start to price in at least based on the interest rate swaps, has started to price in at least a 50% chance that the next meeting in June, very like there's a 50% chance that in June, BOE might go ahead with a 25 basis point cut. So that what we see over here is that that could actually create a bit of, we call it sterling weakness ahead. But however, we got to also be mindful over here is that the US side of the story as well seems to be pretty mixed right now, because it's neither here nor there, because at this point in time, there's no clear sign of what I call dollar strength in the short to medium term. So what we could see over here is, I would say that given this kind of desynchronization in monetary policy, especially one of the other central bank, which is the Australia Central Bank this week, RBA has more or less also indicated to the market that they are also pretty much hesitant to actually cut interest rate as well. So potentially there's actually a slight chance that they may even hike rates before 2024 ends based on the interest rate swap market. So what we could see over here is, I would say that going forward in the short to medium term, there is no clear signs of either dollar strength or dollar weakness movement in among the FX major pair with the dollar intact. So what we could see over here is that any currency against the dollar will be trading in a very much sideways range formation in the short term.
So I just want to quickly circle back to when you were talking about the outperformance of European stock indices over the US. Is there anything that our viewers can be looking out for
Okay,
this?
for sure. So the key thing over here is, we know that the European markets is leading the fort right now against the US this week. So for viewers to look out for is, would there be a catch-up play to actually cover this gap by the US major benchmark stock indices? And the potential catalyst could actually come tonight. So there's actually a key data that we're going to discuss on tonight, which is the one of the consumer confidence data in the US.
I guess that's what we'll be looking out for then, Kelvin.
Yeah, sure, sure. So before we go, this data is pretty important. We call it the
Mm.
University Michigan Consumer Confidence Data, because it has two components of it. The first component relates to consumer confidence in US, which translate to future consumer spending. And consumer spending is part of the driver, of the main driver of US economic growth. And the last month of April, this consumer confidence index starts to inch downwards, on a slower pace, less robust. So we start to see consumer confidence starts to fickle in US. So actually that could be actually a positive sign for the US Federal Reserve to add liquidity to the market. Okay, so that's actually for them, for a reason for them to actually enact the interest rate cut. But on the other hand, if inflationary expectation, which is also part of the consumer survey component, starts to do an uptick. So the last month consumer inflation expectation, both from the 1 year and the 5 year, actually rose to 3.1% to 3% year on year. So that actually is the fastest pace of inflation expectation increase since the start of this year. And if this inflation expectation continue to be on the uptick again, that could actually give rise to the Federal Reserve tying up the hands of actually enacting the first interest rate cut. So if that scenario continues to play out, perhaps we will start to see the continue of that European indices outperformance against the US benchmark indices. So definitely something to watch out for tonight.
All right, we shall see. We shall see. Okay. Thank you so much, Kelvin, for your insight. It's always so good to have you on the show.
My pleasure.
Okay, so we've been speaking to Kelvin Wong, Senior Market Analyst at Oanda on BizTech Asia Midday Market Watch. I'm Samantha Voon, and this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will be on our syndication partners, TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.